Morning. This is the live financial modeling stream, smarthelping.com, and I'm Jay. So, what's going on here? We have been working on updating about 60 templates with cap tables in three statement model integration as well as general facelift, I guess. Some templates need more work than others. This is the freemium template. Oh, don't forget to subscribe, by the way. Like the video. All those are free ways to support what I'm doing. And uh, last but not least, check out smarthelping.com where there's over 100 templates for all kinds of things, not just startup models, but things for all sorts of business logic and use cases, receivables, payables tracking, inventory forecasting, a lot of accounting tools, cash conversion cycle stuff, um, all sorts of stuff here on Smart Helping. Uh, so today the freemium model is part of the SaaS bundle, um, where we have all kinds of different. Now there's actually a couple freemium models here. I would say um, the general mobile app also has in-app purchases, but it also has a free pool and ad revenue and then upcharging. But this freemium model is more specific to, or more general to any kind of business where you want to have users and those users create some amount of ad revenue. We've built logic in the model for that, and then they can have the option to pay for no ads or pay for upgraded service. And there's three pricing tiers. So very general, but very good at uh, providing anybody that's looking into the freemium space to build out some financial models or finances for that. uh, so far it looks like if I keep streaming, the stream seems to be picking up traction. I had people in here most of yesterday, and I had somebody try to say hi to me, and I didn't see it. So I'm gonna put my live chat up on my phone so I could see. Let's also do a quick sound check. What is it displaying? Where? Oh, there it is. Okay. We actually got pretty far in this freemium model yesterday. And yesterday I had finished up the uh come on phone. What did I finish up yesterday? Product as a service. That was a great one. That actually there was a lot of great upgrades on that one. Oh, the visual looks good. Okay. So now I've got the chat here. I can see if anybody says anything. I wish I had a second screen. All right. So welcome in if it's your first time or if it's your. I actually have no idea if I'm just having random new people in here every day or if there's recurring people. I have no idea yet. Um, but we're doing this stream every day from at 10 a.m. Eastern for as long as I can do it. And I do financial modeling as a private contractor, and I also obviously build public templates that I sell. So, and it's great. I love it. I've been doing it since 2016, and it just keeps getting better and better. If you like math, logic, puzzles, these are the kind of streams for you. Also, if you're a student or just coming out of finance and you want to learn some approaches to building models, this is a great place to get some insight. So generally, what I want to do. So yesterday, so first of all, The integrations are getting better and better. I'm trying to get really fast at them. The faster I am at them, the more time I have, and it's just better for me. Obviously, as fast as possible with as much accuracy as possible is where you want to hit. So I'm bringing the three statement logic and general logic for the updated assumption tabs with the cap table. This is a new feature I'm bringing into all the startup models: a formal cap table, uh, capex, and obviously the income statement, balance sheet, and cash flow statement. So we integrated this really quickly. Now there's certain things you got to pay attention to when you're importing data from other workbooks, and there's certain you got to set up the tab names so they don't have spaces on the import or the destination workbook. You also want to make sure um, that you have all the tabs that are being imported on your destination workbook so there's no errors when you find and replace. And in theory, you should be able to get all your tabs in there, hit find and replace, and all the logic. All I've had to update so far is just obviously the income statement. I had to reference the right on the monthly detail tab, the right revenue and cost items, uh, as well as operating expenses. And we'll have checks, a lot of sanity checks on this to make sure all of the different schedules are zeroed out and matching. So yes, I actually don't remember where we left off. I know we got pretty far, but there's still a lot of touch-up things. So let's just start on the income statement real quick. I know the revenue, we got subscription revenue and ad revenue. That's right. Cost goods sold. Let's see, F50. So, yep, that's right. My goal is to get this down to a science where I'm able to more explain high level things. You don't have to sit here and watch me check all these different formulas. But sometimes there are. I mean, it depends on the model that's being integrated. Sometimes it goes smoother, sometimes it doesn't. So it just depends. So that's fine. Let's see, 81, 72, 91. I think I got all those. 81. And obviously, the whole reason why I'm even doing any of this is obviously to make money. It's how I survive. But it's nice that I like doing it. 91. So this looks good. It looks like we got through all of the income statement. Balance sheet. Balance sheet looks good. So I think we're actually through. All these are looking good. Now we got to update the monthly detail to handle all the extra features that we put into the model. We also got to remove some extra spaces. And actually, this is a good spot to put this. So let's see, let's remove 105 to 114. Yeah, this is a good spot to put these extra items that we're going to have. So other cash flow items, this is debt service. Now here, yeah, we got to update. So I guess this is the first place we can start. Um, update the debt schedule. I'm going to pull this logic from our other workbook. And what I'm doing on the debt schedule is it's going to have logic that assumes if the terminal value is selected as yes, all the debt will be paid off on that month. Otherwise, it'll just run out to the end. Get this formula. The goal here and what's best for accuracy is thinking as little as possible when you're doing integrations. You just want to have the formulas, make sure the formulas are referencing things correctly, and you don't want to think. Obviously, you have to have some awareness of what's going on, but as little as possible is the best. And then we'll do here. So this selector, I can't tell you how well the global assumptions edition of this selector include terminal value, yes, no. It made the entire process of accounting for right end month, getting the balance sheet to work. This selector was huge, just one little input cell, and it helped tremendously. So if this equals yes, then we want to pull in the end month. Otherwise, NA. And you'll see this can flow right through to the debt service calculations. So December 2026, you see our formula worked. That's good. It's being all paid off on 160. Beautiful. And if we go over here, you can see in the last month, this just show up as a principal payment right there. Loan balance goes to 0. Let's check. Make sure the cash flow statement's got that picked up. Yep, nice. So that's pulling in the right principal tab. Perfect. Okay. So that's good. Let's see, what else do we need to check and make sure is accurate? This is going to need some work for sure. Oh, shoot. Guys, I forgot to update the resolution. You guys can't see half the frickin' screen. My bad. So let's see. What was I doing? 1920 by 1440, I believe. Completely forgot about that. All right, so now you can see the whole screen, hopefully. I'm working on getting a better setup, but for now, this is what we got to do. Okay, yeah, all this needs updated. But first, okay, yeah, let's get all these other cash flow items because we can't really do the solve what the model's trying to solve for, which is minimum equity needed until this is done. Ungroup this. I don't know why they put group under outline, but we figured that out yesterday. So other items we have that are in the cash flow statement now that have been added. So we got CapEx, sale of fixed assets, taxes, make sure I'm not double counting. Depreciation, let's clear that out. We'll actually have that being calculated. Clear all. Clear all. All these ribbons are different. What's going on, guys? So I'm curious if you guys care to say where your background is. Are you guys students? Working in the field already? Business owners? I'm always curious to see where people are coming from. right, so we have a tax calculation here, but we're overriding this. So expense assumption C56, we don't need that. This is modeling, you always got to just check everything. So that's, wait, what? C56 is blank. Okay, well, it doesn't matter. So taxes we have already calculated separately. We have new logic for that was already brought in. Put this right here. And then that'll be a negative value coming through, so change the sign. Right now I'm just trying to make sure everything on our monthly P&L detail that needs to be accounted for is, with all the new stuff that's been added to the model. So okay, so we have some others. So exit value. Now this we actually don't, this we don't need. This we don't need. The model used to be based on automatic, like it's assuming year 5, month 60 is the exit month, but now we're making it dynamic, so there's some things that need to be updated based on that. Financing, this can stay. This is good and it can stay. So CapEx, sale, fixed assets, taxes. What else do we do here? Sale of the business, if applicable. And really what we're doing is solving for the minimum cash position. And then that's going to flow into equity and then go through the financial statements. I'm also going to have to update this monthly logic to stop if it's past the end month, which obviously the original model went through to the end no matter what. So that's a update. All right, let's pull this in. So CapEx, sale of fixed assets, depreciable assets, taxes. What did we're already referencing that, so we don't need it again. Sale to business. Anything else I'm missing? Financing's in there, debt services in there. We don't need this. This is actually going to be calculated based on what we're doing now. Taxes, interest, we got that. Okay, I think we're good. Let's widen these columns out a little bit to 15. We can drag these. Now for cash flow, what do we have here? EBITDA, debt service, plus this value, plus this, plus this. This is trying to do an exit value here. We don't need that anymore. Gotta drag these over. Okay, so that's in there. Now that 10 million, how much is it? 10,806,000 you'll see on the terminal value. Is you see sale of building plus this 10,806,000. and we're taking 8.8, we're saying 95% of that's going to be applied to regular extraordinary income, which is just taxable at the regular rate. 5% is going to go to fixed assets, and that'll be taxable based on the gain or loss against depreciable value or value after depreciation. And so these three totals here, you can see 10,806 flows right into our cash flow schedule. Now the question is, what do we got down here? So pre-tax cash flow. What's this calculating? Okay, so we're just taking cash flow here, financing assumptions, startup cost. Okay, so essentially we're saying we have $95,000 short of the startup cost, so that's our min cash after borrowing some money. We don't really need this in here, but I'm going to clear this out. If you want to see taxable income, you can go over to the income statement. So this is the number we really want to make sure is right. So what is this doing? Okay, it's just that. So we want row 147 is our target for minimum equity needed to get this thing off the ground. 147. Okay, that's right. It's already doing it. Perfect. And then that'll flow to the cap table right here. And then you could define where that equity is going to come from, if it's investors or insiders or some combination. And you'll update the percentage that each gets accordingly down here. We've also got, we did internal rate of return calcs for each individual entity, as well as consolidated on the distribution tab between investors and owners. This can be updated too now. So this is 224. We actually need 146. So what we're doing here is pulling any positive monthly cash flow. Let's update our dates. Now that should be positive. What, 146? Always try to remove references of the tab if there's a reference to the tab that you're actually on. Let's see what's going on. Is this? There's definitely some positive values there. And we'll do reconciliations at the end to make sure all of this matches our income statement, balance sheet, cash flow statement. So row row 1 is the year. So what are we doing here? This should be row 1. So the import workbook I brought must have been a different one. There we go. So that, and then this outlay, this logic took me quite a bit to get right. When you get down to the cash flow calculations for financial modeling, for like a startup model, trying to figure out how to not double count, figure out what you need over time, and the resulting internal rate of return can be difficult. This model is assuming that you need all that equity up front, whatever it might be, and then it tracks how much is used over time, how much is used at startup. Now let's see, I don't think this is the right number, so our remaining equity to use should simply be, so monthly detail 224. No, so that's not a relevant cell. We would pull E146. So 2,240,000 left. The initial equity position was 2.3. So cash flow is 2.3. Then it uses this over time to cover these outlays. And then it nets anything beyond that against the cash inflows to get the actual amount distributable, which is here. So this is the project level, 36% internal rate of return. This is the discount of future values based on discounted cash flow. We got a net present value. Investors, let's see, looks like this is updated fine. So you've got a whole pool, like investor pool versus owner pool, and then if you wanted to see individual distributions, you can go to the cap table and see that right here. And it looks like we're actually all checked up. That's great. Let's see, 9.7 versus 160. And that's what we got. We'll add a decimal here so you can see 9.7, 160. Remember, the amounts are all arbitrary here. So if you're using this model, you would be entering your own data in all the light yellow cells. All right, so this is fine. That works. Visuals still look good. Oh, I don't know how that got moved over. Executive summary. This probably needs some updates. And then key metrics, that's fine for down there. This we no longer need. That's elsewhere. Oh, what's going on? EBITDA return on equity. So this, well, we can just reference, what was this doing? This is actually, I don't do this on a lot of the executive summaries, but it's a good metric. So this is taking the total EBITDA over time minus initial equity divided by equity. So that'll be minus this divided by this. So in the end, you're getting EBITDA actually doesn't cover the whole initial equity based on our current assumptions. So the reason why the IRR is positive is because we've got a big exit value. All right, so then that's fine. Let's update our annual P&L detail with the monthly. So we put all these items in 5, 6, and 7. So right here. And then when we start the next thing, 113. Two more. Ungroup. So we put it right under this one. All right, that's fine. We could drag this down. You see how important it is to make sure the positioning matches. Okay, we are off by one. So CapEx, business. Okay, that looks fine. So remember, we don't need these two anymore. That's picking that up. We don't need taxes. Actually, these are fine. We don't need taxable income or depreciation. That's already calculated elsewhere. So you see, every template's a little different. You got to kind of just give it a little finesse. All right, now this we want to also add this. And we just want to make sure always that the ending balance here equals the ending balance on the monthly. That means we've caught everything. And actually, let's move this down to over here. 5 million. So what are we missing here? 11. So I've got 11,945 for this last year. Let's check it. This is 9,637. So we're missing something. Ah, I know exactly what it is. We got to add the taxes. Well, the taxes are coming through as a negative number, so that needs to be added, not subtracted. Okay, there we got our zero match. So what that just means is our monthly detail, all the different things that are happening that affect cash flow, match the annual. So that's a good sign. So now that that's updated, we can do the executive summary. So CapEx is now this number. Man, it feels like almost, rehabilitating a template to win all these updates is really satisfying. Debt service is fine still. Financing cash in, we did not change. This we don't need anymore. We actually, so remove that note. This is now going to be, so the exit value split into two things, remember? So we do fixed assets and the sale of the business. So we'll pull that in. Format it. I think, what is it? 10:30. We'll probably finish this template today. I think we'll get done with it. Debt balance, I don't even know why I have that in here. Taxes. Start. Okay, so now let's make sure we've got everything. So 29 needs to be added, not subtracted. And 35 needs to be added, not subtracted. And what are we missing? $4.7. Oh, sale of business. Wait, what's this? We've got that in there. How? So it's 35. Oh, 36 is twice. Hold on. Oh, I know it's not. That's the startup cost. Well, we'll just, I don't even know. We'll just start with EBITDA plus, oh, this is minus debt service plus this plus. Okay, I don't know what I was missing, but obviously it was something because that's a different number. And then obviously minus the startup costs. All right, 8,137. And where are we at? 8,137. Okay, so we're good there. Now, another interesting metric is, let me get this back in here first. Return on free cash flow, which is the cumulative cash position divided by equity contributed. So this is a cool one, and you see it'll be positive at the end. Nice. Got our advanced SaaS metrics for the recurring revenue portion. All right, so executive summary looks good. We can delete this. Make sure our visuals still are right. It looks like this changed a little bit, but let's see. Cost goods sold. Let me see, what do we do for CapEx on that one? I just want to make sure the same things are still referenced. Oh, okay, so it added now all these extra things. So sale of fixed assets. I was wondering why it changed shape. Okay, so that's fine. Let's check this real quick. So revenue, free cash flow. Yep, that's fine. So the main changes there are we added a bunch of things that affect free cash flow that weren't previously in the template. So that makes sense. Cumulative cash position. What's going on here? Oh, it's just such a small numbers until you get to the exit. Okay. Cumulative return. Nice. All right, I like these charts actually. They're pretty cool. They're interesting. We're going to keep those like they are. All right, so all our financial statements should be good. We'll do, yep, nice. This all checks out. So what we need to do now is figure out, let me go through all these schedules just real quick. So that's fine. This we updated. Make sure, okay. see how this is checking if global control 8 is no, that means no terminal value, then all this is just 0. Cap table's fine. Here's the base expense assumptions, revenue. Make sure this still works. Let's say I start this in March. Okay. March. All right, so what I need to do is check and make sure or add the implementation. So let's say our end month, oh, we gotta validate this. Let's say you wanted to run the model for less than 5 years. So we have to allow you to choose a different end month for the model. And then based on that, everything should stop after it. So if we just, let's say August. In this case, let's see, what's the primary driver of all this? I don't think there is. We actually have to do it to each one. So it's if our date of the model is greater than global control this, simply 0 out. Otherwise, go ahead and do the calc. Actually, that can run. Okay. So if we drag this over, you can see how it'll end in August. Now we need to make sure, yeah, like all this other stuff is got to be done manually. So we go copy, and paste it into here. What's this, F25? Sorry for the sound. So drag all this over. Oh, did we lose a number? No. Okay, so that zeroes out. And then we also want to zero out the ending free, unless, because we might have a calculation that looks at ending user counts and does a cost, so we don't want that to show up in there. Hold on. I already can tell. Oh wait, no, this works. Perfect. All right, drag it over. And so that's zeroed out. This zeroes out automatically. Our CPM doesn't matter. This is zeroed out. We're going to have to do the first one and the last two. Okay. All right, make sure we didn't mess anything up. Now we can go all the way across. We also got to do this. And then once this is updated, we'll just do the expenses and that should be fine. So we've essentially added the functionality of having a dynamic end month to the original template, which it used to not have. Now this is nice. So this automatically stops on the last month, but we need to remove the this revenue should not be here. So we'll take make sure nothing changed. Perfect, just this closed out. All right, so that's good. All the cost of goods sold are variable based on revenues and users, so this all automatically zeroes out. Now we do expenses and then we're done. Now I'm hoping I can just drag this out once I put it in. Just double check. Looks good. Perfect. So this can be drug. We'll paste it in here. I'm liking this freemium model. It's always nice to go back and see kind of what logic I did and how it's structured. I always end up feeling good about it. Sorry about the sound. Okay, last one, R&D, and then I think we're all set after that. Okay, anything else showing up on the after the end month? It does not look like it. Nice. All right, cool. I mean, let's just go back. And I think we got everything. So a user can come in here. You can edit all these different assumptions for revenues, expenses. You've got a cap table, capex, terminal value, debt schedule, startup costs, and then just go in, and then all these reports automatically will populate based on the numbers. Internal rate of return, discounted cash flow analysis, visuals. Our monthly detail is just a more granular look at what's populating the income statement, monthly and annual. So this all looks good. And man, these integrations are getting easier and easier as we go along. Next, so this is going to be done. I'll have to do some checks, which I'm going to do here in a second. But tomorrow, we'll probably go on to professional services firm. That should be a pretty good one. And then general mobile app, which is the first time I started to use advanced retention curves and stuff. So that'll be a fun one to do. Let's see, we don't need this. All right, let's check. Let's do our checks. So first, now this is nice. This is the first time I've had the checks auto-populate, but let's see. So annual net conversion monthly. I don't know if it's on the right row position though, so we'll see. Annual net income versus monthly income statement, annual H59. Okay, so that's good. Insanity checks, they are hard to do, or they're just time consuming, but it's 100% worth it. It helps you feel more confident about the results of the model. All right, balance sheet monthly and annual, so that's going 60 and 60. We'll make sure. Okay, yep, that's good. Yep. So these are good. Annual detail against monthly. Annual detail J225. That's probably not the right one. We want 148. Oh, annual detail. Oh, and it's K, not J. Here we're checking the balance sheet cash flow versus the annual detail. So we know the annual detail is J148. And then C16 should be, yep, the total equity required by the project. And then index balance sheet 11. Yep, 11 if 5 matches terminal value 3. So 5. And then this is D3. NA, hold on. What did I mess up there? Indexing balance sheet. Oh, annual. Okay, hold on. No. So that is right. We want D4 if it's doing the annual. That's just taking the year against 4. So 173, we'll see that could be a potential, some reference we have to update. Executive summary to annual detail. So this is this minus annual detail this. So that's good. Distributions. Nope. What's our annual detail cell? J148. And then C distributions. Let's see if that's right. C10 to G10. Yep. Okay. And then finally, individual distributions check against total, sum of cap table, N57R59. That I think that's right. Yep, this total here. Okay, that's looking all great and dandy. So our only issue here is the balance sheet versus the annual cash flow, which this can't be right. There's got to be some issue with my sanity check formula, because I'm getting 9,268,000 and oh wait, 6,691,000. Okay, hold on. Oh, plus we got to plus the equities. So we're out. We are still out by a little bit. And let me just make sure it's not a formula issue. I'm going to go here and this is the most important check for the P&L details because we want to make sure. So this minus cash flow, these are the most important, or balance sheet. And then if we add that to the equity contributed, okay, 173,853. So we are out. So this is a fun game now we get to play, which is called Where Are We Out? So our balance sheet is off by 173,000 to the cash flow state, or the annual detail. What could it be? 173,000. First, let's make sure our cash flow monthly and annual match. Balance sheet 9268. Yes, so those are congruent. Hmm. 173,000. Well, I guess what we do first is let's go with year one. End of year one, we are at cash balance of 312 minus equity. So cash position here. Let's add our equity in. Just this. Okay, so 309,137, and what did I say we were at? 312. Okay, so this is off by a bit, a little bit. That's good that it's off, so it's probably something that's in every month. These investigations are always fun when you solve them. So 312, we're at 309. So what's that difference? 2894. All right, now what is that number? 2894. It's actually very small. What could that be? Principal payments are 8,000 for that period. 2894. It's not principal payments. It's definitely not interest. This is where things can take a bit. So we got to figure out why. And what I'll do, so let's go to the cash flow monthly. And let's measure this against our monthly detail. Because we know the monthly detail and annual detail match, so that's good. So our cash flow is this plus. Okay, so that matches for month one. Let's go to month two. Month two cash flow monthly detail is 45. And we just check, we just see when we don't match anymore. This minus here. Okay, 5063. This is 48,776, 48,725. So our detail is adding an extra $50 in costs or in cash somewhere. Then 102, 154, 207, 315. So it's getting more and more. What could it be? Potentially an item from the, what's a small expense we have here that we might be missing? I think that's what it is. Is it this? Sales and marketing? I think it is. So we needed to do row 81 plus 84 for our total sales and marketing. So 81 plus 84. And we did, I guarantee we didn't do that. 81, and that was it. So add, man, I love it when we figure these things out. Add 84. Yep, that's it. There's the 5063. So we drag this over. Let's go back to our balance sheet where we were checking things. Or no, we were checking on the cash flow. And there we go. Alrighty. Love it when you can figure that out. So we're looking good. All of our balances are checked on all the statements. That's great. I want to check taxes real quick. Let's just make sure this is doing it right. So taxes for the last year, if it's a partial. Yeah, see this. This year. Right, so we need to update that. So first of all, if, let me double check and make sure nobody said anything. Nope, okay. So on this, we don't care about this C5 as blank logic. We want to say if C5 is greater than end month, then zeroed out. Okay, now we should be able to drag that on over. What's going on, guys? We're just grinding through here, figuring out a tax thing. Okay, so taxes should be, let's make sure this number looks right. We've got 1.9 million, and on the annual, 1.9. So that looks great. Which should be, yeah, between 20 and or 10 and 25% weighted average between these two. So actually it should be this number times, I think, 25, and then this times 10. 1930. Oh, what did I set my tax rates to? 22 and 10. So if we check this, it's 22, 10, 1714. And we've got 19. Oh wait, no. We can't just do it on. Wait, no, that should be right. All right, so let's think about this. And normally taxes aren't like, there's so many different variables with taxes, but I did want to put it in here just to show there's going to be a tax expense if you're making a profit. And I separated out taxes on fixed assets as well. Let me scroll this over one and see if we're. Okay, so I just want to check this last year because the last year is more complicated. So we've got this and that. Taxable income of this. We also want to do. See, this is complicated. We'll have to manually do the other portion of the taxable income, which is going to be EBITDA minus interest minus depreciation. So that portion is going to be taxed at our 22%. And then you've also got taxes on the exit and the sale of fixed assets. 191,849. Okay, 191,849. Okay, so that's correct. We're good there. Awesome. Because now, let me go back and check the product as a service template. I'm pretty sure I pulled that logic from there, and we're going to have to make sure this exits after, let's see if we do a end month. That's partial. And this is something that won't come through in the checks. Let's go to the annual and see if it actually materially affected here. So our taxes should have been 5,697, and really it should be this amount. Nope. Okay, so glad I caught that. So we're going to have to update this calculation on here too. If C5 is greater than our end month, this has to be 0. And if you don't want to deal with taxes, you can just zero out the rate and it won't show up. There we go. Okay, and then we go back to the annual. Now we see 4 million is the number we wanted. Okay, I'm gonna save that. And while we're at it, we might as well check what's the other one we did. So Freemium is good, Pass is good, product product as a service, web or app. Let's check this one. Here we did it. So see if D5 is greater than global control 0 out. So this one's good. At web apps got it already. I think there was what else? The SaaS startup model, that one assumes the last month is exit, so we don't need to worry about that one. Car wash, let's check that real quick. Perfect. That's already got the logic in there. Thank goodness. Franchisor licensing. And so what I think happened was going from the three-statement base model to the web app, and then going from the web app to pass. There was a loss of that logic, and then going um, then pass to freemium carried over that same thing. So now we've got it in our pass model. Okay, good, it's in here. Franchisor licensing's got it. And last one that we actually did is equipment rental. So good news, the only issue on here, oh, hold on, let's make sure this works. So go partial on equipment rental. Okay, yeah, that works too. That's ending after the end month. Okay, so that's great. Don't save. The only thing we had was on the product as a service template. So that was update. That's good now. Yep, save that. And we've got it now because we're going to use this to integrate other templates. So it's a good thing that's updated on that one. All right. Now the final thing we really need to do is all the tabs are updated. We check if all our checks work based on different assumptions. So on terminal value. So if the end month, let's go now to a full 5 years. We want to see zeros here every time, and we'll be locked in and done. So that's good. No, that's all zeros. Let's go to if we end in year 4 instead of 5. Oh yeah, if you have no terminal value, you have to put 0 on the multiple. We still have an issue. Okay, so let's look at this. What is this? Balance sheet to annual detail. 30,000 off. Let's go in here. Oh, 30,000. Is that what I'm out by? 30,401. This looks like it's just a sanity check formula. Yeah, 30,401. So I'm taking balance sheet minus annual J48. So J48. 148. What's this 30,000 coming out of? Debt service. Um, so debt schedule, if we have NA here, no exit. This should just end. So if we go over to our monthly detail, yeah, so we got to put in our check on the global control C6, which is our end month. Go into here, and that should turn those off if it's a month that's greater than the end month. Okay. Yep, that looks better. All right, now we're zero balance. If we hit yes here, there's an error, but that's just because if you hit yes on terminal value, you have to enter a multiple. Zero it out after that. And then let's do final check, partial year within the 1 year earlier. All right, we're good to go. So freemium model all updated. Note, I am looking for suggestions on other, I'm looking for potential, whatchamacallit, the metaverse. So the metaverse is this whole new thing, and there's a whole bunch of business opportunity. And I'm looking for maybe 3 or 4 business endeavor ideas to build models for within the metaverse. So I'm taking suggestions on that. We might take a little break from updating these and build a new model, potentially. Potentially, I don't know. We might not. I better check also on the pass if our debt. It's got to be working because I checked it, but I just want to see. So if I choose I've already got it on a partial end year. If we go no here, okay. Thank goodness it matches. Let me see what I did on the monthly detail. This would probably already had it in here actually on the base version. Yep. Okay. And so that was something that's not imported, the regular debt service tab. So that's why on the freemium it was not work. And also the freemium model never had any logic to have a dynamic end month. So now it did. So okay, that's great. This is all working. It all looks good. We're all checked up. Everything's balancing. I'll have to update the index tab, but other than that, we are good to go. Um, I'll post an overview video that just does like a quick, like 6 or 8 minute overview that goes through the whole model and post that up. And if you want to purchase a template, this one's only $45. Link in the description box below. Or if you guys want to check out all these SaaS models, we've got 13. Also note, we've got a couple, this rolling revenue forecast was pretty cool. We've got a customer curve and retention curve model that's pretty awesome. And all kinds of stuff. So feel free to check out smarthelping.com. I'll see you guys tomorrow morning. We'll just keep grinding on this.